Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwagwo. Coming up on the program, IFC and Moroccan Capital Market Authority collaborate to increase availability of sustainable finance in Morocco. South Africa looks to sell AstraZeneca vaccines. And Ethiopia's inflation rate rises to 19.2% in January 2021. Let's get the show started now with market numbers and starting off here on the African continent. Of course, here in Nigeria, the index reversed the positive sentiment seen on Thursday and was deep in the red by 2.61% due to massive declines from listed cement giants Boa Cement and Dangote Cement. South Africa's JSE index was marginally negative by 0.03%. The market in Egypt was closed for the week slightly positive on Thursday, while Kenya ended Thursday's session positive. And investors in major Middle Eastern markets closed the week mostly positive on Thursday. The Qatari index was the only laggard, ending Thursday's session marginally lower by 0.05%. On the flip side, Saudi Arabia's market posted the largest gain of 0.47%. In the UAE, Dubai's index rose 0.07%, while Abu Dhabi's index was marginally higher by 0.01%. In Europe, stocks retreated slightly on Friday as investors monitor the fresh batch of economic data and the gathering pace of vaccinations against COVID-19. Well, we'll have Chelsea on the floor of the Frankfurt Stock Exchange to give us more details there. Good afternoon, Chelsea. Europe has seen a surge in companies going public this year with a best start to the year for initial public offerings since 2015. What's driving the increase in activity?
What seems to be the main driver of this, this flurry of IPO activity is digital companies. So about 70% of the companies that we've seen go public are companies that are in some way related to the digital space and have really been benefiting during the coronavirus pandemic. So one example here in Frankfurt is Auto One, which went public last week on the Frankfurt Stock Exchange. Those shares shot up almost 50% in the first day of trading. It also is a digital company that customers can use to buy and sell used cars. So that's just one example, but we've seen about 8.4 billion euros worth of IPO deals this year, just in the first month and a half. That's the best, as you said, since 2015, but it's also the best year for European IPOs, the second best year for IPOs since 1998. So it's really been a very strong start to the year because we are seeing so much interest in the tech space right now, which we've also seen in the broader market rally as well, as these tech shares have really been surging. Right now, there's just not enough companies going public. So a lot of investors are hoping that we'll see more and more really joining in on this IPO frenzy.
And the European Central Bank is facing renewed pressure to make its trillions of euros worth of bond holdings greener. Tell us more.
So this has been a big priority for Christine Lagarde, the head of the European Central Bank, since she took over in 2019. She's discussed several times how the ECB needs to be greener and be more in line with climate change. So there's been a lot of pressure on the central bank to do that. What we heard this week from the head of the French Central Bank is an idea of how that could be achieved. What his proposal is to look at the European Central Bank's bond buying program, through which it already holds billions of euros worth of corporate bonds, and in some way come up with a ranking system for which companies are green, which companies are not green, and target its bond buying at companies that are more aligned with its climate change goals. So companies that aren't really moving towards sustainability could be, to some degree, shut out of the European Central Bank's bond buying efforts. This is going to be very, very controversial, though. There's still a lot of opposition to central banks really getting involved in climate change efforts. But this will be discussed later this month when the central bankers meet here in Frankfurt to discuss its long-term strategy. Climate change is really a huge topic right now for both central bankers and markets more broadly.
In other developments, U.S. President Joe Biden's administration said it won't remove tariffs on EU goods as part of a dispute over aircraft subsidies. Is this a disappointment to Europe?
It definitely is. There had been very, very high hopes coming into Joe Biden's presidency that once he took office, these tariffs would come off very quickly, that the relationship would be very quickly repaired. Under the Trump administration, the U.S. imposed tariffs on more than 13 billion euros worth of European goods as part of the Airbus-Boeing aircraft subsidy dispute, but also aluminum and steel tariffs. That's been quite hard for a lot of industries here, especially some smaller businesses like French winemakers, Italian cheesemakers have been hit with tariffs as well. So there had been a lot of hope that this would immediately reverse, but the Biden administration seems to be wanting to take its time. So there is still hope that at some point they will reach some sort of agreement on this. And Biden has said repeatedly that he really wants to bring in Europe as an ally to fight back against China's more aggressive trade policies. But for now, these tariffs appear to be staying on.
Chelsea, it's been a great week with you, and it's time to say thank God it's Friday. Enjoy the rest of the weekend. Be safe and be well. And Britain's economy shrank by the most in 300 years in 2020 amid the fallout from the coronavirus pandemic, but has avoided a double-dip recession in the fourth quarter. Let's see how the markets are digesting these numbers, and let's talk to Juliana. Good afternoon, Juliana. The GDP figures are making the headlines today. We talked about it in the morning, but how are the markets digesting the numbers?
Good afternoon, Chimeze. No change on the FTSE at intraday and early trading, of course, because of those pretty abysmal GDP figures. It opened in the red. It's in the red at intraday, as you said. 9.9% drop in GDP in the year 2020. There were no surprises there, really. I think the only surprise that a lot of economists have taken away is just how Britain is faring compared to its other G7 nations, particularly the USA and Germany, who seem to not have been affected as badly as British GDP. And of course, we are still very much into a lockdown. Even though Q4 we saw growth of 1%, we're not going to expect that growth in Q1 of this year. So will that recession come about again? We're not so sure. Andy Haldane, one of the Monetary Policy Committee members, a deputy governor at the Bank of England, did say the economy looks like a coil at the moment and that it will spring back in the spring. But that's if we do manage to get out of this ever-increasing lockdown. So let's have a look at those numbers then. The FTSE All-Share is down 0.17%. The FTSE 100 also down at 0.09%. And the FTSE 250 down by 0.28%. In the currencies market, the British pound also down on the US dollar by 0.20%. Up on the euro by 0.01% and up on the Japanese yen also by 0.03%.
And Chancellor Rishi Sunak says the figures show that the economy has experienced a serious shock as a result of the pandemic. Now, that, has been felt by countries around the world. What does he plan to do about it when he presents his budget?
Well, that is the billion-pound question, and there is lots of speculation. I think one of the issues that we've had with the British government and the British media is that there has been so much leaked information. There have been complaints about it even in the House of Commons. So, as you would expect, because everybody's waiting for this long-awaited budget to be delivered on the 3rd of March, there is lots of speculation about what is and what isn't going to happen. Of course, because of the abysmal GDP figures this morning, the Chancellor did speak to some British media. As you said, quite rightly, he said this is a shock to the system. Don't think we've had such abysmal figures since 1709. Apparently, there was an apocalyptic winter at that period. But he said his focus is going to be on jobs, protecting jobs. So perhaps we may see an extension to the furlough scheme. The furlough scheme costs a lot of money, but without it, unemployment rates would have been far higher than they are now, which means the GDP would have been much worse because people just wouldn't have had the money to spend. So we could see an extension of that. Also, Treasury sources are talking about perhaps a freeze on your personal tax allowance. Now, here in the UK, if you earn £12,500 or less, you don't have to pay tax. That could freeze. So it's supposed to rise each year with the rise of inflation. We may not see that. Also, as well, if you earn £50,000 a year or more, you have to pay 40% on tax. Again, that is supposed to increase with a threshold, but perhaps that may not be the case. That would save them £6 billion a year. Quite importantly, the Chancellor did mention that public finances are important. Yes, the government have opened up the public purse and have spent, but if they don't claw back that money, if we get COVID 2.0, which I pray we don't, the government want to make sure they've got enough money in their coffers to pay for it, which is why they want to slowly start clawing some of that money back, Jimmy.
So can we have a sneak peek into what to expect next week? I know you don't have a crystal ball, but you simply try.
I was actually going to bring up my crystal ball, which looks like an iPhone 12.
Okay.
But next week, there will be more COVID, of course, definitely more COVID, more vaccination announcements. But quite importantly, we've got on Wednesday inflation data really, really low. The Bank of England threshold is 2%. Last month, in December, it was about 0.3%. There are some estimates it could be as low as minus 0.4%. That would be very worrying. And then on Friday, we've got retail sales year on year, month on month. It's been a horrible year for retail. And we've seen that with the dismantling of some of the stalwarts like Debenhams and Arcadia. So we'll be having a forensic look at that and PMI data. We're going to have a look at February's PMI, which will show us just exactly how badly the private sector in Britain is faring at the moment.
Well, lots of data there to chew, including the data concerning the coronavirus. Well, while we keep a track on that, go get some rest and we'll talk on Monday.
Thank you, Jimmy.
In Asia, shares in Australia and Japan struggled for gains on Friday. Wet trading volume was relatively low as many markets in the region are closed for the start of the Lunar New Year holiday. In Australia, the benchmark ASX 200 dropped 0.63%. With the financials, energy and material sub-indices struggling for gains, among others. Japanese markets resumed trading after being closed Thursday for a public holiday. The Nikkei 225 declined 0.14% to 29,520 points, while the Topix index climbed 0.16% to 1,933 points. Major indices in China, Hong Kong, South Korea, and Singapore are closed for the Lunar New Year holiday. And futures tied to major U.S. equity benchmarks dipped early Friday as Wall Street looked set to wrap up the week with modest gains. Dow Jones Industrial Average futures dipped 39 points. S&P 500 futures and Nasdaq 100 futures traded lower, about 0.19% and 0.14% each. Shares of Disney jumped more than 2% in extended trading after the company reported strong growth in paid streaming subscribers and crushed expectations in its earnings report for its fiscal first quarter of 2021. Now, the major averages are on track to post a positive week at record levels through the strong rally to begin February seemed to take a breather. The global oil market prices fell further in early trade on Friday, extending losses after OPEC cut its demand forecast, and the International Energy Agency said the market was still oversupplied. Brent crude was down 0.8% to $60.67 a barrel, while U.S. oil was down 0.9% to $57.71 a barrel after falling by 0.8% on Thursday. Both benchmarks closed on Wednesday at their highest level since January 2020 after a nearly record-setting run of consecutive daily gains. Oil prices have risen over the last few weeks as OPEC and other producers in the group known as OPEC Plus cut production, while Saudi Arabia also promised unilateral reductions in output that started this month. And in metals market, gold eased earlier on Friday as the dollar and treasury yields edged higher, but prices were on course for their best week in 3 as hopes of more U.S. stimulus underpinned the metal. Spot gold dipped 0.3% to $1,820 per ounce, while U.S. gold futures slipped 0.3% to $1,821. Spot platinum fell 1.9% to $1,211 an ounce as investors booked some profits after prices killed on over 6-year peak of $1,268 on Thursday. Silver fell 0.2% to $26.89 and palladium was steady at $2,344. All right, we'll look at other developments on the African continent when we come back after the break. Do stay with us. The launch and growth of digital financial services has led to an unprecedented increase in the number of people enjoying access to formal financial services. Today, Africa is home to more digital financial services deployments than any other region in the world, with almost half of the nearly 700 million individual users worldwide. But what is the future of fintech and mobile payments in West Africa? Ted George, the Chief Narrative Officer at Clio's Advisory in London, joins us now to shed more light on that. Thank you very much for joining us, Ted. Good to see you. Good afternoon.
It's good to be back. Thank you.
So this week, you chaired the Africa 3.0 conference, which was focused on fintech in Africa. What were your key takeaways about Africa's digital ecosystem?
Well, I think probably three things. The first was really that the level of innovation is extraordinary at the moment. There are all kinds of African innovators out there. They might be trying to get money to farmers or to SMEs run by women or remote health consultations. But there is an incredible amount of innovation out there, which is very encouraging, and it's homegrown. I guess another thing is about the level of collaboration is impressive. There's a saying that competition makes better products, but collaboration makes better companies. And there are a lot of examples there of international fintechs partnering with African innovators. And I think in this respect, actually, the UK is really one of the leaders when it comes to collaborating with African innovators. But I think the final point I was left with was actually something that was said by one of the founders of M-Pesa, which is that financial inclusion is 1% done in Africa. It may be that most Africans have a mobile phone, many of those are smartphones, but you can still see every day in Nigeria people queuing outside banks to try and get cash. There are still many blockages in the system. There's a lot more work to be done and a lot more investment until we really can financially include everyone in Africa.
And one of the themes that came up was startup poverty. African innovators struggle to get funding and, of course, support to go from proof of concept to series of investment. How serious is startup poverty in West Africa, and what is being done to address it?
Well, it's a real issue, startup poverty, because everyone really has to essentially fund themselves from the very first proof of concept right up to the point when serious investors come in. Something like 1% of all the investment in the world into fintech goes to Africa, just 1% of it. And of that, only 1% goes to female entrepreneurs. And the reality is, in the conference, I saw dozens of African women who are developing fintechs. So I think what's really needed is a different attitude towards investment. It's not about patient capital. It really is about capital that is prepared to lose some money. It's not about trying to find the one really good fintech and investing it. You need to invest in multiple fintechs and accept that a lot of them are going to fail. But failure doesn't necessarily mean the same as it does in the corporate world. You keep trying, you learn from the process, and you find something that works. So if you look at the West, they've had 50 years of governments supporting tech growth and taking the losses. We need to have a similar attitude in Africa. We need to go out there, invest in a lot more startups and innovators, and then we'll find the unicorns.
And then the AfCFTA came into force at the start of January, promising tax-free and frictionless cross-border trade. What will this mean when it comes to cross-border payments and investment? Will there still be digital borders?
Well, absolutely. I mean, we still have digital borders now. So it may be that from the 1st of January, trade has been flowing tax-free and unhindered across borders. But if you want to make a payment from Togo to Ghana or from Nigeria to Niger, you're going from one currency to another currency, different languages, different legal systems. And very often you've got to buy dollars in order to send it into another currency as well. So there are digital borders there at the moment, and they are a major blockage. But we do have some areas where there's free movement of money. The CFA franc zone is one. In East Africa, between, let's say, Kenya, Tanzania, and Uganda, you can move funds easily. So the key here is going to be collaboration between different regulators to allow these flows. So we can end up with someone, let's say, in Nigeria, making an instant payment to someone in Tanzania and hopefully doing it for free.
All right. Thank you very much, Ted, for your time. It's always a pleasure. Enjoy the rest of the weekend.
Great to be here.
And the International Finance Corporation has signed an agreement with the Moroccan Capital Market Authority that will help companies enhance their reporting on environmental, social, and governance practices, paving the way for more green investments. As part of the partnership, IFC will support the Moroccan Capital Market Authority's efforts to improve capital market ESG standards by building its capacity and aligning its disclosure regulatory framework with international best practices. According to the president of the Moroccan Capital Market Authority, aligning the financial sector to sustainable development is more important than ever in the current context of economic recovery. And South Africa's health minister says the country is discussing selling or swapping AstraZeneca coronavirus vaccines after data showed they offered minimal protection against mild or moderate infection by a COVID-19 variant. According to the health minister, it is not yet clear how an onward sale or swap may work or if AstraZeneca would agree to such a move.
Other countries, well, it's an option. I did say that, in fact, I was surprised this morning. I woke up with a couple of emails from some of the countries who are saying, hey, send it to us. We will consider it. We will consider mainly that first our scientists must tell us what we do with it. Can we use it within the time that's available, so before it expires? And if not, can we swap it with anyone else? And we can swap it because we've discussed with COVAX, we've discussed with AVAT in the AU platform. So we will see what's happening.
And data released by Ethiopia's Central Statistics Agency shows that annual inflation rate rose to 19.2% year-on-year in January 2021, indicating an increase of 1.6% from December 2020. Food inflation in January 2021 stood at 23.1% from the 22% recorded in December due to the increase in the price of the grains, vegetables, sugar, cooking oil, spices, potatoes, and coffee. The non-food index inflation stood at 14.5% in January as a result in the increase in the price of home care and energy, furniture, medicals, and transportation. And EcoBank Nigeria says it has successfully priced its $300 million bond issuance maturing in February 2026, with settlement of the bond to take place on February the 16th, 2021. The transaction is the first non-sovereign bond from Africa in 2021 and a milestone capital raise for the banking sector in Nigeria. The fixed rate US dollar denominated bond with a tenure of 5 years carries a coupon rate of 7.125% and represents the lowest ever coupon or yield achieved by a Nigerian financial institution for a benchmark bond transaction. It is accompanied by a B- issuer rating from Fitch, an S&P rating agency, and will be listed on the London Stock Exchange. And that's a wrap on the program for today and, of course, for the week. Thank you for watching. I'm Chimeze Obi Iwagu.